Right, good morning everyone as we head into European trade on Wednesday the 3rd of April. It is another interesting day in markets. Certainly has been an interesting start to Q2. What we can see, rising treasury yields pose a test for richly valued US stocks, which if they continue much higher from where they are at, it certainly does pose a risk to risk assets. But we'll have a look at that as well and see what direction we may think, or we think it may continue, which I would imagine probably more chance of it going higher than it is lower from here. Firm dollar keeps yen pinned near key 152 level, and 152 level is the intervention level from the Bank of Japan. Be interesting to see if traders are willing to have a go at the Bank of Japan and willing to have a go at the Japanese government. Do they try and get it above 152 and kind of make them pull the trigger on intervention? That would be interesting. For now, that's not quite materialised. Gold smashes record highs again as US inflation worries loom. Inflation problems, inflation not coming down, potentially even rising. Something I've been saying for months now at this stage. Gold continues to break towards record highs. Gold heads against inflation. Well, gold doesn't really like higher interest rates, but it does like higher inflation. So, does that move continue? It's certainly a record highs. I wouldn't want to back against it, but I think it continues. I do think as long as until they, as long as they keep interest rate cuts priced in, I think gold continues to rise. If they turn around and push back on interest rate cuts and we don't get those three this year, which I don't think we will, I think gold's a good sell. So for now, short term, keep buying it, but I've been saying for weeks, gold will be a good sell at some point coming forward. I absolutely do not change my mind on that. That will materialise at some point when the Fed drop the ego and admit they were wrong again. Asian shares fall as US yields hold near 4-month high. I can really talk this morning for some reason. But yeah, again, it's all about US yields and where they are at the moment. Oil steady while markets eyes geopolitical supply risks. There's kind of some attacks out in Iran. Obviously the ongoing conflict with Russia and Ukraine, Israel, Hamas. There's multiple things going on over that side of the world. And then you've got over this side of the world, you've got US manufacturing PMI the other day strong. You've then got Chinese manufacturing PMIs strong. Obviously two powerhouses of the global economy, the two largest consumers of oil. Manufacturing sector expected in both of those countries to remain strong. So certainly over the next month. So certainly interesting moves in markets over the course of the last couple of days has caused this grid. I'm not going to spend too much time on this grid. It's kind of a little bit all over the place at the moment, but if we jump across here, you can see, if I have a look at this chart, right, this commodity index, another thing to do with inflation. You can see the way commodities are moving. You see the way gold, silver, oil, you look at US oil, UK oil, which is obviously WTI, and then Brent. Look at copper, and also this commodity index, which is a basket of 17 different commodities, priced by Reuters, and that is just blasting higher. It's something I've been looking at quite a bit recently on these webinars. You're above 2023 highs now, approaching the highs set back when Russia and Ukraine first kicked off. If we can get back up to those highs, I think inflation won't rally off the back of that. Yeah, no way they're cutting interest rates 3 times this year, and then that causes you to focus on yields. We had a pretty important break on yields in yesterday's session, above these highs, fresh yearly highs on yields. From the lows posted back end of last year. It's been from here to measuring tool out from here to here, a good 16% increase in the price of bond yields. I mean, we're obviously not quite up at 2023 highs, but ultimately that trend looks like continue. It's it's clear higher lows and higher highs, clear fresh yearly highs on the 10-year yield. You go and have a look at the 2-year yield, and the 2-year yield is up texting these highs at kind of 4.75. If you get through 4.75, 5% looks prime for a test, and then the commodity prices continue to rally. That continues to put pressure on inflation. Economic data continues to remain positive, which again puts upwards pressure on inflation. Central bank think they're cutting interest rates 3 times into increasing inflation and increasing commodity prices. It's just idiots if you ask me. That definitely ain't happening. Which then, assets are tradable off the back of that. Certainly if this 2-year yield gets above 4.75 up towards 5%, that is likely to be the move we need to see a sustained correction in equities. S&P 500, the Dow Jones, the Nasdaq, the Russell, no longer being held up by the Magnificent Seven, we'll call them. Right, all those stocks are struggling up at the highest. Things like your Apple, Nvidia, Microsoft, these kind of stocks, not romping to fresh all-time highs like they were in the past. I know markets are up here on a daily time frame. The trend is still strong, but kind of a 4 hour, 1 hour, these things are looking somewhat vulnerable down on these lower time frames. Economic data continues to be strong. As I said, inflation rallying, commodities rallying. Not a good recipe for risk assets to continue their moves higher, as they did price in 6 or 7 interest rate cuts in October of last year. That has then been now reduced to 3, and that is likely to have to be reduced further. So, and then what are the implications from that? Inflation remains sticky, all the things that I've already just mentioned, and now interest rates are not being cut, or not going to be cut. What does that mean for business conditions going forward? It's a tricky one. Equities lower. Maybe the easier trade is US dollars higher off the back of that. Dollar longs are increasing. Dollar yen, kind of the one you want to leave out, but euro dollar is an interesting one. You got a pullback in euro dollar. You got a rally to sell into. You've got economic data over the course of yesterday. You got German CPI missing consensus, although still 0.4, still missing consensus, which is substantially lower than last year, back within the 2% target. Although 0.4% over the month of March is still too high. The year-over-year figure, back where the central bank would want it. You got inflation out of the eurozone today. If that misses consensus, should be a pretty easy sell of euro dollar, something you can hold for a week or two coming up. I think the ECB gonna have in a slightly different place to the rest of the or certainly to the Fed. The ECB gonna have to cut interest rates soon. There's now a 50-50 chance that they do cut interest rates in their April meeting. If that happens, obviously, is another question. But if inflation, do they front run a cut and try to get ahead of the curve? Certainly, if these inflation prints miss consensus by a decent chunk today, that becomes a more likely possibility. So that's what we'll keep an eye on today. Euro dollar shorts potentially. Dollar yen always has to be on the watch list. The higher it gets up towards this 152, more worth it is a punt on some shorts off the back of some intervention. Maybe you can get a stop loss up at 153, 152.50, 153. Kind of wide stop loss and take it back towards these sort of lows. Back in through here should be something that is achievable. If you do get intervention from the Bank of Japan, which they are strongly hinting at doing, so maybe that's worth a bit of a punt if you're that way inclined over the course of the coming day or two. Let's hope traders have a bit of metal and decide to go and test them. But interesting markets at the moment. Obviously, this chart, or these charts, as I spoke about a little bit earlier, the way commodities are moving, the way inflation is moving, continues to put upwards pressure on yields. If we have further sustained upwards pressures on yields, should cause more of a pullback in risk sentiment. Yields pushing higher, pullback in equities. Fed not cutting interest rates 3 times this year. Perfect recipe for US dollars higher, I think. But yeah, main economic data today is Eurozone inflation. We've got services PMI out of the US. Let's sit there and let's hope for that to be a positive print at 3 o'clock. Jerome Powell speaks at 5:10, speaks on the state of the economy. Let's see what he has to say at 5:10. Surely he can't be too negative about the state of the economy, can he? With the state of the economy being pretty good at the moment.